Hey Andy and Jamie, what's going on today?
Hey Scott, thank you for that intro. Good to see you this past few days in our annual meeting, and same goes for you, Jamie. How you doing, buddy?
Absolutely, yeah. Back in the saddle now. It was good to see everybody. Had a great meeting, and now we're back.
All right, yeah, we talked about some exciting stuff. We're going to be bringing some good stuff to you here in the future. So anyway, you'll have to hang on for that. Let's get started. Thank you for coming in today. This is the Trading Studio. I am Andy, and my sidekick is Jamie there. So let's get started. And first thing we need to take care of is our disclaimer. Okay, everything, guys, that you hear today or see should not be construed as investment advice. Okay, that's not our objective today. Okay, we are content publishers and we are idea generation, and we're going to be talking about some ideas. But once again, if you're looking for investment advice, look for somebody who has a license like a stockbroker or an RIA. All right, let's move in to our support, training, and education, because we have lots of it here, okay? It all starts in the trader's room with Barry Einerson. He's a great moderator. Guys, this is free for everyone. You do not have to have a Trade Ideas subscription. We think you'll get one once you see all the excitement in there, getting to see our software in action and seeing all the traders in there. They're finding some good possible candidates for going long or short. So it's a great group. Get in there. It's free for everybody. And not only that, we have webinars throughout the week, Monday through Thursday in the same time slot. That would be 5 Eastern time, the same time you're in today. And myself, Jamie, and Steve will bring you content and education and help you with the software. These are interactive, so you can ask questions. As a matter of fact, we encourage you to ask questions. And then, of course, the Q&A demo on Wednesday. That is our CEO, Dan Merkin, and Brad Williams, our CTO. And great place to come to ask questions and get a demo of stuff coming down the pike. All right, and also our our Friday support session. We'll be having one tomorrow that will start at 11 Eastern. This is come one, come all Q&A, same format as we're seeing here. We use the GoToWebinar interface, and you ask the questions and we answer them, and can also show you on the software if we have to answer a question that way, in which most cases we do. All right. But let's not forget, we do have TI University. This is a class that starts every Monday at 12 Eastern time with 101. It graduates each day in the same time slot until we finish up with Advanced 401. We had our company meeting, our annual meeting this week, so these were not available live, but in case that ever happens again, these are available on our YouTube channel. So same content as we're doing currently. So get in there. If you cannot make the live TI University, be sure you watch them on our YouTube channel. All right. Moving forward, I want to talk more about the paper trader because it is live now. It is working. I notice a lot of people in here are not subscribers. I'm thinking maybe a lot of you guys are coming to the test drive. We'll be having it the 1st of February, on February 3rd to be exact. You're going to be excited about this, and so we're going to be talking a lot about, well, not necessarily today in today's webinar, but coming in the future weeks ahead. As we get closer to the test drive, we'll be talking a lot about the paper trader. We are very excited about it. It's a way for you to come in, test your strategies, your portfolio management skills. You do not need a broker, okay? You do not need a fund and account, okay? Everything's done internally on our software, which is very cool. So, and not only is that cool, the Brokerage Plus interface is very cool. I've traded on probably 15 different softwares in my life, and that is a really sleek looking interface, and I think you'll find it exciting. All right, the agenda for today. Okay, market recap, talk about it, talk about the broken record, and then the Holly recap. Jamie is going to take it over. Boy, there were some good trades in there today. nothing just, breathtaking, but boy, pretty steady. All three of them finished in the green. And then a topic that I discussed in the last webinar last week, the revenue growth. We talked about revenue growth, and I showed a top list. I shared it with people. There were some good calls in there, and I hope some of you guys caught that. I even mentioned a few of them that we were in. That would be a little fun that Jamie and I and Steve and Michael kind of trade to test out the Brokers Plus and all that. So we're going to go more into that. I'm going to share some more ideas on some concepts behind how you might look to trade these. We'll go over a few of the stocks here that you're seeing that took off from that list, that top list, I should say. And then I'm going to kind of veer into what's called RSI, and we're going to talk about how to use maybe RSI divergence when you're looking for possible turnaround candidates like the four you see on the screen right there. I think this is good stuff. If you haven't dove into some stuff like this, I think you're going to find it really interesting. So let me back out of this now, and we will pull up the SPY chart. And boy, here we have it, guys. And once again, what can you say, Jamie? I mean, good Lord, this is a very strong bullish chart, and we continue to say there's no bear case scenario. And obviously, all one has to do is look at this chart and see that is the case. All-time highs. All you got to do is look over here in my single stock window and see year highs, lifetime highs, just highs everywhere you turn. And not only that, we closed near highs today. So anyone, bearish right now, it's got to be painful if you've been sitting, wrong in this tape for this long. But I will share something interesting as we move on later in the webinar, talking about what I just mentioned, the RSI divergence. So something that we may have to keep an eye out for. But nonetheless, boy, if you're just looking at price and that is what pays, it is just a very strong market. I'm not going to spend time today drawing up areas where may pull back to and all that. You guys know the popular moving averages and support resistant areas and things like that. So I am not going to go into there. We'll take a look at some of the other ones, and I think you're going to find the same picture in most of them. Qs, very similar, lifetime highs. The diamonds, same thing, lifetime highs. IWM, we're not there yet, but oh my gosh, did we hit it today, Jamie, finally?
No, getting close,
Getting close. Yes. Well, that's kind of, there is a little bit of, you can't see it, but there is a little bit of a gray in there. Not much, but you can see here for that IWM to reach this level right here. That is where we'll need to go. But boy, looks like that may be the targets, Jamie. But nothing is certain when it comes to stocks and equities, and that's for sure. But or indices in this case. But Jamie, I'm not gonna beat a dead horse here or whatever pun you want to use, but I just don't have anything else to say. It is a very strong market, all-time highs, well above all the moving averages. So I'll save the latter. The only other thing I want to say about the spiders when we talk about it later. But you have anything you want to add?
Well, I mean, the case in point is that, will the market get pulled down because the IWM does not, come on up to meet the rest of the indices, or vice versa? Right now, it's looking like it's going to get there. Of course, nothing is written in stone. But boy,
Exactly.
of course, we had our company meeting, a lot of talk about, well, I bet the small caps or the lower dollar stocks, there might be some good opportunity. And of course, we had one today. We'll go over that in the Holly recap. But I mean, the engines are firing. It looks like the IWM is going to catch up. And boy, when it does, then what? We're going to get additional lift in the, in the Qs and the SPYs. That kind of seems to be what the mob is thinking. But nothing's for certain, so we'll see. And of course, tomorrow's Friday, and we know how that goes. And by the way, just as a mental note out there, everybody, tomorrow is options expiration day. So just something to keep in the back of your mind as tomorrow's session unfolds.
True, very true, Jamie. All right, yeah, it does feel like finally the major big indices like the Qs and SPYs are kind of the IWM's hanging on a rope, and they're on top of that cliff, pulling them up. Come on, to join those on top of the mountain there. We'll see. But if you'd like to take over, Jamie, we'll talk about Holly for a bit, and then you can pass it back when you're done.
Yeah, no problem. Let me just flip it over here. Hopefully, I think everybody should have eyes on. Let's see here. Okay, here we go. All right, so, as Andy was pointing out earlier, the AI modules, if you direct your attention over here to the channel bar, we can see what do we have, 22 total trades between all three of them today, and they did all finish green. Kind of a mixed bag as far as the risk modes. We have one of each today: aggressive for 1.0, conservative for 2.0, and moderate for Neo. And of course, those are the three risk modes that we have, and seeing them all finish in different modes today, certainly interesting. What I will say is that, boy, aggressive for 1.0 finishing at 66 bucks, assuming 100 shares per trade. But what we saw during the session, a little bit different. All right, so what do I mean by that? I'm just going to click on NK today, which was one of the Holy Grail or 1.0 plays coming from the Nickelback strategy. And boy, look at that thing. Once again, small dollar stock as the IWM plays catch up. And look at that entry price right there, that entry signal at $5.82. Now, if we focus on the conservative profit side, which is Holly getting out roughly about 18 minutes after the trade was executed. Why? Because this thing got up and boogied, and it got up to that green line pretty darn quick in the following 15-minute candle and hit that target, okay? So that's where Holly's gonna pull the plug in conservative mode, banking about $303 on 303 shares there. And once again, I have my risk factors for the AI set on $100 per trade risk, right? So when we talk about extracting a little bit of that spread between moderate and conservative profit, what do we mean by that? Well, target was hit. If you were in the trade with Holly, on a manual basis, you could have made the decision, well, this thing is just ripping on up. I think I'm going to hold it and ignore Holly's target hit. Of course, if you were automated and you had that in place, you probably got hit. But if it was a manual trade that you took, you had the option to go, you know what? I'm going to stick in this thing because the volume is really kicking. And when we talk about volume on the relative scale here, check out what this little guy finished at on the day. I mean, 53.43, kicking out 32 million shares when it usually only does not quite 900,000 a day. So very liquid, tight spreads most of the day. But boy, look at what it did after Holly got out. It just kept on motoring up all the way to the top here, which would have been the wick of that candle. Not saying that I top ticked it. Maybe there's somebody out there that got lucky and top ticked it, but man, he had 70% gain at the top there before it backed off. So plenty of time to exit for, 30, 40, 50% gains in NK today, and not a lot of pain to sit through. Had plenty of time as this thing cycled down to get out for some really nice return on NK today. So even into the close, we're up 27%, 70s at the high. So, I mean, talk about a barn burner from Holly today. NK was definitely it. So keep that in mind as we push through tomorrow and even into next week. Depending on what that IWM does, there might be a lot of smaller dollar stocks that are trying to play catch up here. So that is the premier example of getting some conservative and moderate profit spread there. Let's take a look at this one, AXNX. This one coming from Holly 2.0, from Float On, which are the stocks with, I believe, the 20 million share float is the magic number, and we can see down here, this little guy came in at 18.69 million on the float. Why did Holly get out of this one? for a flat. Well, that was profit save being initiated here because the thing just wasn't doing a whole lot. We got a little run up here, come back down to that entry line. Looks like Holly got a little bit nervous, and after this pullback right here, just decided to can it or use one of her audibles. Audibles being profit save or reduce risk, and that's what she did on this one. So bottom line, flatted it out. This one, you know, it came very close to hitting that hard stop, but check it out. On this candle right here, what do we get down to? 30.90. Came within 2 pennies of getting stopped out. Once again, right here as well. Give me my crosshairs here. Well, that one maybe came within a penny on that. I don't know why it's not giving me my crosshair data there. But the bottom line is this, that's why the hard stops are there. Sometimes they come real close, but boy, this one towed the line. And if you had the patience to sit this one, you got a higher push towards the close. Of course, you know, when they're running like this, NK looked a lot like this too. So trying to figure out if this was a good exit right here in the heat of the moment, not easy to do because it could have kept on doing the same thing that that NK did, but this one pulled back, floated just right above that stop area for a very long time. So keep in mind, when we see Holly making this exit right here, and if we continue to track it, see a couple of these wicks right here, as it consolidates in this area right here, what does that present to we traders? It gives us the opportunity to get a better price as we consolidate below the entry line here. And man, you could have kept the same stop or put a penny underneath as this thing trudged along sideways, got a much better price than the AI, and still enjoyed the uptick towards the end there, especially as it started riding this 10-period SMA once it stabilized a little bit. So this is a great example of watching for Holly exiting that could have acted as a pretty decent entry price as it tempted this stop level here, but never triggered it and gave us some confidence and gave us the opportunity to get a better price than the AI. So big difference there between 0 and $100 based on a $100 risk there. So let's take a look at a short here on AA. Not the biggest profit, but still a pretty decent spread between 16.63 and 73.15. Once again, Holly executing a profit save. Got really nicely into the money here, set the wiggle up here. That's when Holly decided to pull the plug. This one coming nowhere near the stop loss. All you had to do on this one is basically be patient. A break-even stop would have even kept you in this one for the remainder of the move and resulted in what we're seeing right here, about 4% holding into the close, never getting back above that entry line. So a break-even stop could have kept you in this one. And really, Andy, that's about all I'm seeing on the radar today as far as risk, or excuse me, I always want to say risk on versus risk off, but risk off is now conservative, risk on is now moderate profit. I guess this one would be worth taking a little look at here. This one was a long, same song and dance as we saw in the other play. We get a buy signal here. We hug the entry line, come on down, get kind of close to the stop loss area there, put in that little wick, and then we're nice and solid for about an hour consolidating sideways here. Once again, a great opportunity to get a better price than the AI, and then this thing just chugged back on up as soon as it reclaimed that 10-period SMA. Had some nice opportunity for exiting at a profit and nice opportunity for getting a better price than the AI did. Other than that, not a whole lot of spread that we're seeing here. Kind of a mixed bag, even though the AI did finish green on all 3 segments. We had a big barn burner here. We could have clipped a lot more than what you see here in 1.0. And just on the other side of the fence, don't just like to show the winners, but had quite a few losers in the bag today too. Looks like maybe Neo got a little overzealous with a 10 trade count there, 1.0. These guys kicking in 12. Looks like Neo maybe just traded, over-traded a little bit today. Hey, been there, done that many times myself. So we did have quite a bit of losers on the books today too, but more importantly, overall net positive finish with some really great opportunity in the NK and a couple of other opportunities to get a better price than the AI and still enjoy some nice gains. So, you know, that's about it for the AI today, Andy, unless you have anything to add there.
Well, one thing, Jamie, and that's at NK. I mean, really, we have two data points that we track when it comes to our P&L, and that's the exit reason that Holly may get out on,
Mm-hmm.
or the closing price at the end of the day. And
Yep.
NK is a great example where you, as a trader, could have done much better than either one of those data points,
Yep.
because there was a lot of what do you call it, Jamie? Uh, there's the best it can do while it's holding the trade? I forgot what's the term we use.
Are you talking about aggressive?
No, well, no, not aggressive. It's the maximum. Yeah, the maximum. Of course, that's
Right, right.
before it spits out.
Maximum alpha, right?
There you go. Yeah,
So,
there was a.
yeah,
Go ahead.
once you see these levels up here and you're like, hey, well, give it another 15-minute bar, we get some vacillation here. And then, if you're trying to hold on for as much as you can, once you see this type of wick put in right here on that 15-minute candle, that would have been a pretty good signal to go, you know what, it's tried, buyers tried to take control, couldn't do it. So, even if you didn't get out at the top, right here, after we see that final candle and that big wick right there, you're still well above what we were looking at in close, which is still 27%, right? So yeah, maximum profit topping out at 70%, but hey, clipping about 50% of that, or 50%, high 40s on top of what we see going into the close, completely doable there.
Absolutely. All right, Damien, I get your talk. Are you referring to the swing channel?
Okay, I'm soaking up
Okay.
his question too there. Yeah, I mean, we've got quite a few of those things in there. Just about any top list, right, can be used as a intraday or a swing trade candidate based on what the, obviously what the long term looks like. Now, having said that, we do have several things. If you go down to channel 4 and take a look, you're going to find all of mine and Andy and Steve's and Sean's favorite scanners in there. So a lot of those can be applied to, the longer time frame as well. But a good idea to get into at the end of every day is going through all of these symbols that Holly has put out and taking a look at what's happening on the longer term, because you might notice some decent setups on the daily as well. A matter of fact, one of our team members here, Sean McLaughlin, who is Chicago Sean on Twitter, he curates a list of all the Holly plays that he thinks are setting up for good swing trade plays as well. So if you're not following Chicago Sean on Twitter, you might want to do that because he's pumping out some really good swing trade candidates based around the AI.
Yeah, exactly. And if you want to hit me or shoot an email to info@trade-ideas.com too, I have some pretty good swing trading alerts I'll be happy to share with you as well. So yeah, we don't hold anything back here. So just feel free to, like I said, just shoot me an email and I'll definitely share with you some concepts. As a matter of fact, the one I'm going to talk about today, I talked about last week, and I'll be happy to share this one. I'm sure a lot of people, great, Damien, will want this after I show some of the stocks that have come through this lately. And it's called revenue growth fishing. And what it's looking for, I'm not going to go into detail, break down the configuration again. I will tell you this, you could probably look at a chart and tell a lot of it. It's looking for stocks that are kind of pulling back on the 3-month time frame, but they have good revenue growth, in some cases huge, revenue growth. And there's funds out there, just like there's funds that look for dividend yield, high dividend yield stocks. There's a lot of fund that look for just revenue producing companies, and they have to invest in those funds. And they look for opportunities much like this top list looks for these same opportunities. And so it's looking for stocks that have been beaten up over maybe the last, let's take a look down here, a couple of others, BSUN, you can see here, they're beaten up over the last at least 3 months. In a lot of these cases, they've been beaten up pretty hard over the last, year. But once again, they have great revenue growth, and this intrigues a lot of Wall Street people, and not only that, traders like myself and potentially you guys too. But anyway, I'm not going to go back in history and show these to you. You're going to have to take my word for it. I know a lot of you guys who were in last week's webinar, you saw some of these in this top list. But just by looking at the chart, I think most of you guys are going to see it looks like it fits the same type of parameters you see coming through here right now. So it's looking for stocks that are potentially turning around, okay, and making a turn on the daily chart. A good example of some of these guys, big example, it was Beyond. Okay, you can see Beyond here was for 2 months, was just kind of just hanging around down here around the 74, 75 range, could not get going, and then all of a sudden out of nowhere had a huge move. Okay, and I did mention that we were in this in our little fund that we manage. All right, another one I told you we were in this last week was Pins. Same type of chart. Look at this, turning around. You go back to last week, it was right about in here. Now look at it, up. Gosh, another, whatever that is over the time period. It looks like a well over 10%, probably. Oh geez, I'm not going to try to guess. 13, 14. Another one, Shack. Look at these, same kind of thing, 2 months, hanging around down. Look at this wet revenue growth, 32%, okay? Look what happened, boom, got into gear. So let's see, what are you looking at to determine the inch? Well, that's just it, Joe. And I talked about this last week. You have to be real careful when it comes to entries because you can get, shook out of some of these trades because you will get a lot of head fakes. Now, what I have noticed in a lot of these ones that have been beaten up, especially coming after maybe coming after a bad earnings call, they take time. In some cases, 2 to 3 months time. I like to give these things at least a couple of months. Okay, not always the case. If it's not, after at the very bottom, maybe it's just a 3 month pullback on a 3 month range, but still kind of hanging around. Excuse me, the midpoint for its yearly range or something like that. But when they've been beaten up this hard and they're on a year low, yeah, I like to give them some time to kind of work themselves out. Now, the key is you can play longer term options. Maybe if you want to take a chance back in December, maybe you can buy some options out in January or February. Or another alternative is just to go in really, really low. But look right here, look at the, look at this volume bar right here on Shack. On this day right here, it like doubled all these other volume bars. That right there is possibly a good sign that this thing is ready to turn around. Another one I mentioned last week to keep an eye on, GWPH. Now, I was traveling on this date and I missed it, but nonetheless, you can see here turning around, had a nice little go, pause, go candle, and you had a gap and go right here. Did kind of get ugly yesterday, but nonetheless, still well above its level down here where it was coming through the revenue growth fishing. We didn't talk about that one, so I'm not going to bring that up. I'll talk about it here in a minute, but definitely wanted to, I'm trying to think of some others that were coming through here, Jamie, that we were in.
Yeah, I was going to say TLRY, but it didn't consolidate long enough. It still went, and it had has massive quarterly growth, but did not get. It really didn't have the time to set up, like we like to see.
Mm-hmm. Here's one right here. You got some nice quarterly growth, 54%. I don't like. I mentioned last week too. I'm always a little bit leery when I look down here and I see a big cash to debt deficiency. That's a little bit scary to me versus something like well, let's just check some of the others and see what you have there. There's not too bad, but still probably would like it a little bit better. I'm trying to think if there's some others. GWPH, let's check that one. There you go. There's a good example. Cash, look at that cash to debt ratio. Okay, look at that quarter, just incredible quarterly growth right there. Now, this is kind of a speculative industry, you know, when you're in the cannabis industry, but nonetheless, the fundamentals are still, you know, pretty solid there when it comes to cash debt ratio and, of course, the quarterly growth. So I'm thinking this could even have some more. Okay, let's see. Frank says CYN, CYCN. Let's take a look. I'm not showing any quarterly revenue growth. I'm not sure why on this one, but you're right. That's the kind of chart that we do kind of look for.
I'll just say that's a pharmaceutical. That's a pharmaceutical right there, Andy. That's
yeah.
Those get a little scary. You know?
Yeah, they do. Yeah, you got to be careful with the biotechs, especially the ones that may only have one drug in the pipeline. You know, they get a bad FDA ruling, and it could just be a death nail in those things. So, plus that's a sub $5 stock. But to answer your question there, Frank, that does have that kind of pattern. But that's definitely more speculative in something like this. I love it when I see the big names. As a matter of fact, Facebook was in here at one time. And I'll have to go pretty far back to show you, but it would have been right around here. Facebook was coming through this thing. Of course, you can look at a chart and talk about what it did after that. When you see the big names down here, you know, the ones that are very liquid and, you know, look for the revenue. If they have huge revenue, maybe that's a good sign too. Let's see. I don't have time to go into that right now. I'm sorry, Suresh. If you want to send that to info@trade-ideas.com, we can send you a short video that will explain how to do symbol list. Real easy. All right. All right. So what I wanted to talk about today is maybe how can we get maybe. Because somebody says, well, when do you buy these? So what are you looking for, you know, when you're trying to determine, you know, when you might want to buy these? Well, I'm going to show you something right now, and what it's called is RSI divergence. Okay, and first thing we're going to do is we're going to build. Let's just put in one of the stocks that we've seen, GWPH, lately in this revenue growth fishing. And don't worry, I'll share. I know there's a lot of people. We got a great crowd in here, by the way, Jamie. I'll be sharing this revenue growth fishing with you guys.
Yeah, I already dropped it in. I already dropped it in there. Just FYI, Andy.
Okay. Oh, thanks, Jamie. Appreciate it. All right. So let's build an RSI indicator. Okay. So we're just gonna go down here to indicators. Okay, and we are going to add RSI. Now, what we're going to do is we're going to use the standard. There's a standard in the industry, and it's a 14 period. And we're going to be focusing on the daily charts. Okay, so we're not looking at intraday. We're looking at, let me make sure that's all my little spaces are proper here. Let's choose a color. We're going to set color there. Just leave it at red. All right, and we're just going to do it in a new chart area. We don't want it superimposed over our price candles. And so let's click OK, and let's kind of broaden this, make this big so everybody can see it. All right. So first of all, what is RSI? It's simply a momentum indicator. Okay, it's going to give you an idea. It's an oscillator a line that goes from 0 to 100. Okay, it's just an oscillator, and it's supposed to gauge. It's called a relative strength index. Okay, so it's kind of gauging the strength of the stock, and certain in the industry, anything over 70 can be considered overbought. Anything below 30 can be considered oversold. Now, I never will buy a stock just because it's oversold. I'll never short a stock just because it's overbought, and that's not how it works. But what I like to do is marry it up with price action, okay, and volume and things like that, because stocks can stay oversold for a long time. They can stay overbought for a long time. All you got to do is look at Apple. But what I do like when it comes to RSI is when you have divergence, okay? And first of all, you got to understand the calculation when it comes to an RSI. Basically, all it's doing, I'm not going to get too deep into this because I don't really understand the formula and all that, but basically, it's a calculation of the sum of the gains over the period that you're using. So in this case, 14 days. It's looking at the sum of all gains, and it's versing it basically against the sum of all losses. So it's a formula that looks at each day's gains and losses over the last 14 days and creates this relative strength index based upon that. Okay. So the most important thing is what I'm going to show you right now. You don't need to get into the formula and all that. Some of that stuff is just overkill. But when you see stocks, this is a great example of this GWPH. Okay, look at this, pretty big gap down right here, probably off earnings, and it was trading in a downtrend. Let's just draw a little line here. Basically trading in a downtrend this whole time from here all the way to right here when it finally broke it. Okay, there's your nice little downtrend. Well, this is the RSI, okay? And if the relative strength index was going to continue, in other words, the weakness was going to continue, you will see the lines, okay, the RSI lines sloping in the same direction as the lines in the price, okay? This is a kind of a downtrend over this, let's just call it a 2-month period, okay? But look what starts happening here. In this case right here, okay, we hit a low right here, basically probably a year low right here in this GWPH. Well, the RSI did not dip below this low, and look what happens from here. I can't draw a line in these, Jamie. I notice it will not let me draw. Let me see if it works now. For some reason in these other, it won't. When I click on it, it won't stay. But
right,
I'll tell the text about that. But you can see it. I don't have to draw it. Look how the RSI is not going lower. It's actually making higher lows. You had a higher low right here. We dip down right here again in GWPH, much higher low right here, another dip down right here, and a higher low right here. That is what you call divergence, okay? The stock is trending down and going lower, but the RSI is not, okay? So a lot of times when you have a divergence right there, it's telling you that maybe underneath all this price action, the stock is not as weak as it appears. In other words, maybe the sum of the average losses aren't as bad as they appear to be when you're looking at the price action. Now, that like I said, there's no correlation in the marketplace that's 100%, but this is something that I do like to look at, okay, when I am anticipating maybe a reversal. This has to do with reversal moves, okay? So keep an eye on the RSI. Let's check a few others after I get a drink of water here. And let's take a look at some of the rest of them. Let's take a look at pins. And I'm not sure if I've even looked at all these. Great example there. Okay, look at the RSI as it made new lows. Okay, you had a low right here, low right here. Look how low the RSI is. Well, it went much lower in price right here, but look at the RSI. It did not make a lower low. It made a higher low. Same thing can be said right here. Okay, now it's definitely taking its time, so you got to be careful to see this right now and say, oh wow, man, we have RSI divergence here. I'm loading up. This thing's going to go. Look how much longer it took before it finally kind of broke out of this kind of cup here, and hopefully it's going to continue since I'm in this. But definitely something, guys, that is a great case of RSI divergence right there. You have the price that is trying to go lower, but the RSI is telling you not as much weakness as it appears. I hope this is making sense. Please ask questions, guys, if you have any. All right, let's take a look at Shack. Once again, a good case, okay? It was basically just basing, but you do see some lower lows right here. RSI didn't go any lower, and even as we kind of touch down, a lot of times too, guys, what you can look at is the wicks. Look when they go down, how they pop up, these wicks right here. Let me zoom in a little bit. All right, look at that wick right there, went down, boom. Okay, this is one of the reasons why you might not be seeing a lower RSI in this case. There's another one. You have a series of wicks. It's telling you right here that this stock is getting tired of going down. Okay, you can marry up a lot of time these wicks with the RSI. Well, no, it's tough, and the reason it is, Suresh, is when it comes to reversals, or this is the case with a lot of strategies. The formation will be there. You can see a stock is getting tired. Okay, it's this beautiful base here, but you just don't know when it's going to go. And then I've tried to create alerts, but where do you put them? You think right here it may go and it comes back down. Oh, we're going to go this time. It's on a 20-day high right here. Oh, come back down. Okay, but I can tell you this: I've traded long enough to know that those who can be patient, and withstand, a lot of this back and forth action, whether you play it with options or just real small size, nothing wrong with buying the common. You have to be really patient, and it's hard to do for a lot of traders. It really is. Another thing, yeah, sometimes you can look at leaps. There you go. You can trade it with leaps. Leaps are kind of expensive, but that will work, Suresh. All right, let's take a look at. Let me take a look at the time first here. Yeah, we're doing good. See if there. Oh yeah, Jamie brought up TRLY, which is in the same sector as GWPH.
I believe it's TLRY. Yeah, there we go.
Right. We noticed it back on these days right here. We were talking. As a matter of fact, you can see my alert. And once again, I was traveling on this day and I missed it. But
of course, Murphy's
Law.
And
of course, yeah. You were traveling too, Jamie. I remember you were kind of eyeballing it too. And but this one kept going lower. And you can see right here, look, we had a lower RSI here. Okay, but look what happens right here as it goes and takes out this low over here. That RSI didn't go much lower. You can see the RSI are making higher lows. Now this one didn't drag out for another 2 months down here, but it had been kind of ugly for the last, for a long time. And then look what happened. You did have a nice little volume bar. So I think if there's anything, if you feel like you have to look at something, I would focus on volume. Volume a lot of times. I have a phrase I've used for a very long time, that volume doesn't lie. And in this case, boy, even if you didn't catch it on this day, look at the volume on this day. And you still could have had a really nice pop in that one. All right. Let's see if there's anything else I wanted to. I know there's a couple that we're missing out there, Jamie, but I just can't pinpoint it. Okay, let's see. Prithi says, is it safe to make an entry call when RSI is between 30 and 40? No, I never like to use a metric just as on itself, as far as when to possibly make an execution. I like to marry it up. As for example, in pins, I was just I think I made it on this day right here. Okay, so the volume was coming in. As a matter of fact, I think I saw a pretty big 15-minute bar on this day, volume bar, and I was a little early, but I didn't buy enough size to where I think my stop was down here somewhere. I was basically making I shouldn't say guess, an educated guess that, hey, the selling is done. It had been beaten up, formed a nice space. I had some volume come in. It didn't work out that on this day. I had to sit through it for a few days, finally got my move. A lot of it comes with experience, but to answer your question, no, I will not use just a single, because look at over here, the RSI was at 21 right there, 21.96. You can see it in my header at the top there. So if I would have bought it right here, I would have sat through this thing for a very long time. So yeah, I don't use numbers alone to answer your question there, but good question. Yeah. All right, and if you guys have any more questions, we can take a look at some of these that are in here. We talked about them, but There's another example that, oh, this is one that I recently bought, CDC, and I missed the first move. I thought I did. Okay, right here, look at that, nice. Let's just take a look at the turnaround. Okay, look at the revenue growth. You got almost 50%, got nice cash, current debt, Smile Direct Club. I'm sure you guys have seen their commercials. This is a new issue, so it's a little bit more risky, but nonetheless, you can see right here, okay, everything was there. Okay, the quarterly growth was there. I picked it up on this move right here. I think right here is actually when I saw it, but I was patient, and I said, you know what, I'm going to put a bid in on a pullback, and I think I put it right here on this low. I set through a little pain, but like I said, when you're buying these, first of all, let me say this: when you're buying these, you're buying for a pretty big move. You're not looking for a 5% scalp on something like this. I'm not anyway. Okay, if you're risking buying a stock near all-time lows or 52-week lows, you really want to have it work for you if you're right. Okay, and in most cases, if you're right and you did pick the reversal, you're going to be right big. All you got to do is take a look at Beyond. Okay, look at that move you had in Beyond. If you were right, from 75 maybe all the way to what, $130, 130. That's a huge percentage move. I can't even calculate that. But getting back to CDC, a lot of times if you miss what you feel like the original move, don't be afraid, to buy these on a pullback. All right, which kind of brings me to my last topic here. Okay, so anyway, guys, this is something that Jamie did drop in there for you. I'd keep an eye on this. BSUN is maybe one you could take a look at. If it gets above this 50-period moving average, maybe one that's kind of ready for a reversal. Although it's only been did have a drop down there, looks like off earnings. So it's been a couple of months. So this still could go sideways for a month. And listen, there's no guarantees. Okay, there's no guarantees that this thing's not going to go back and test these lows over here. But I do like the risk reward in a lot of these. So if for those of you who do like kind of looking for reversals, I would definitely consider making this window a part of your arsenal there. All right, so getting back to something I think you should keep an eye on, and that's the SPY. Because we are potentially, I say potentially here, seeing what's called bearish divergence. Okay, now today kind of through my theory, it gave it possibly a little bit of tweak, but you can see here back over here. Well, let's look at this example in the SPYs because it does work for indices. And I'm going to go back to right over here. Now look at this area right here as it's hitting new highs. You can see the RSI is up around 70. Okay, even right here it was up around 68, getting close to 70. A little bit higher there, but look what happens here as it makes a new high. Okay, what do you see when you go down here? Look at my cursor there. That is what you call bearish divergence. Okay, the stock market price action made a new high, but it was not followed by the RSI. Okay, RSI was making a lower high in this case, and look what happened in the subsequent days in the spiders. Okay, so it can be. Oh, Peter's saying he can't see revenue growth fishing. You got to click on that chat window. Click on your chat window and expand it, and you'll see it in there. Peter? No, I don't have Beal. I haven't worked on that yet. Okay, the RSI divergence scan. Maybe that's something I'll try to work on in the coming days and coming weeks ahead. Right now, it's just kind of using the good old naked eye thing. And by the way, in Texas, we say naked. All right. But anyway, great example right there in the SPYs. Look what happened. You had higher highs in the price action, but right here you had much lower highs in the RSI, and look what happened in the coming days, a nice little pullback there in the SPYs. Now, we might be seeing this right now, okay? Look at the high right here. You had a nice RSI high right there, above 70. Right here, as we took out highs, again, RSI creeped up there, but look what's happening now, okay? We made another high right here, but we did not get it in the RSI. We got a lower high. So I will keep an eye on this, okay? And because today we're much higher in price action, but once again, we have not even eclipsed this high in the RSI. So keep an eye on this if you want to, you know, make it a part of your charts and start tracking RSI. If you're following the overall market, you know, you might want to keep an eye on that. The chat window, Peter, is in your GoToWebinar interface. Your interface there, in your dashboard, you should have, in yours, you would have polls, you would have questions. It's the same window you probably found your questions panel in. There's a window in there called chat, and click on the little, okay, he says he found it. Great. All right. So, Jamie, that just about wraps it up. I just wanted to show everybody a little bit about RSI and how you can look for divergence in the marketplace and when you're looking at stocks. Oh, thanks. And it may be a nice little indicator to look at when you are looking for some of these, because it's what it's for. These divergence are for reversals. So something you might want to look for when you're checking out some of these stocks in the revenue growth fishing. All right, great crowd today. Thank you guys for all your great questions and your attention. Thanks, Nick and Gabriel and Chris and everybody. Jamie, do you have anything to add? If not, I'm just going to go ahead and bring Scott in here, and he can walk us out. You guys hang on. He'll have a discount code for you.
I think you covered it pretty well, Andy. I'm all good over here.
All right, Scott, you want to come in and dance us out of here?
First things first, we have a test drive coming up early February. It's a great chance for any of you that are not yet subscribers or who are standard subscribers to try out premium trade ideas and all those features for 2 full weeks. We used to just run these for a week. Now we found that it gives a much better experience if we run it for 2 weeks. It gives you a chance to spend a week getting used to the tools and then another week really exploring them. So just go to trade-ideas.com/test drive to learn all about it and sign up. We do charge a little bit, but that covers the data fees for the exchanges, so you get the real-time data, the ability to backtest and access the AI and all that stuff, all the goodies. We've got some ebooks. If you don't have them yet, you should pick them up. Trade-ideas.com/setup is the place to go to get them. There's 3 books. Each book is organized by topic. They include some cloud links inside the books, so you can add stuff to your layouts, add some of those scans to your layouts. And both Andy and Jamie contributed some chapters, so do check them out. I've got a podcast. We haven't started season 3 yet, but probably going to happen this week or next. So get ready for that by searching for Trade Ideas Podcast wherever you listen to your pods, and just add us as a subscription. In the meantime, there's some back issue episodes that have interviews, so you can dig through the list and find those. Some of those are pretty much worth it. We've got a code that's good this month. If you want to get started right now or want to upgrade right now, just use the code SIMULATE. And on checkout to save 15%. Those of you that are subscribers and want to upgrade to premium, just plug that in from your account management screen by logging into the main website, selecting the Change My Subscription, and there you go. Any questions, email us, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot, also follow at TodayTrader and at Trade Ideas. And Trade Ideas Pro is the Facebook handle for you to follow and like, but send your questions to info@TradeIdeas. That is the best place to send all your questions because it goes into our help desk software and gets routed to the appropriate person to answer it. Thanks, Jamie. Thanks, Andy.
Thank you, Scott. And Robert, this is recorded, and you should get an email reminder if you're signed up for webinars. So you can probably catch it on our YouTube page either late tonight or tomorrow morning. Thanks, everybody. See you tomorrow in the Support Friday.
Yep, we'll see you in tomorrow's support session. Have a great day.
Thanks, everyone. Bye.